This week, the Australian dollar fell from around 79.50 to 78.50. While domestic data was mixed, most of the fall was due to a rise in risk aversion. Concerns around the Korean peninsula had faded from market attention for a while now, but returned to the fore this week. While threats from North Korea are familiar, US President Trump's reply to Kim Jong-un's Sea of Fire line with fire and fury caused concern. While US Secretary of State Rex Tillerson tried to downplay these comments, Trump later doubled down, saying that Pyongyang should be very nervous. As expected, we saw demand for safe haven assets. The Swiss franc and Japanese yen outperformed other major currencies. Gold rose by around $30, while US government bond yields and equities fell. The US dollar was also supported by data. We had been saying that markets were getting too gloomy on the US, and markets were unprepared for the string of positive data that we saw. The payrolls report showed that the unemployment rate was at equal lows since 2001. Small business optimism rose, and we saw a record number of job openings. Given this backdrop, the Aussie held up surprisingly well. Domestically, we saw a strong business survey. Conditions and confidence both rose and continued to hold above long-run averages. While the details showed a struggling retail sector, overall the report indicates a trend improvement in the underlying conditions of the Australian economy. Meanwhile, consumer sentiment deteriorated again. It is now the 9th consecutive month where pessimists outnumber optimists. Concerns around family finances, interest rates, and housing affordability in New South Wales and Victoria outweighed the optimism around jobs. Overall, the data releases have been positive enough that markets are not expecting any further RBA moves this year and have around 50% chance of a hike priced in by next June. In the week ahead, the highlight for the Australian data calendar is the jobs report on Thursday. Leading indicators are pointing to a strong report, and we expect a gain of 35,000 new jobs. We're expecting a rise in the participation rate, which should keep the unemployment rate at around 5.6%. Wages data on Wednesday is worth watching, but shouldn't be surprising. We have the RBA minutes on Tuesday, but we've already heard quite a bit from the RBA recently. From the Statement on Monetary Policy, which includes their updated forecasts, as well as Governor Lowe's semi-annual parliamentary testimony. Key US data in the week ahead includes retail sales, as well as the FOMC minutes. As a risk-sensitive currency, the Aussie remains vulnerable to continued tensions between the US and North Korea. This could see it trade down to 77.50. However, we could see it probe back towards 79.50 given the steady outlook from the RBA, as well as continued support from commodity prices. We'll speak to you next week.